Good morning, good afternoon, and good evening for those in Europe. Welcome, guys. We're going to start here in about 10 minutes. All right, guys, 10 minutes here with Nic Chahine. We have a great session planned for you guys. Stick around. We're going to start in about 10 minutes or so, guys. All right, guys. We're gonna get started here in a little bit. So in the chat, let me know when you're ready to start, when you want us to go with the green light, folks, and let us know as well where you are tuning in from, guys. We want to know where the Benzinga base is located. Also, um, keep in mind we have a great session for you planned here, right, with Nic Chahine. So for today's session, this is what's going to go down. All right. Nic is going to go over his presentation and all that stuff. You will, at the end of this presentation, it could be, 1, 2, 3 hours, depending on how long Nic wants to go and how much time we have. But at the end of this presentation, you will have learned and have a much better understanding of options. Even if you're new or advanced, this by itself will put you a leg up, right? So just keep that in mind. That's the goal of the presentation here with Nic. So interact, be engaged, participate. Let's see who we have here. Timothy from Atlanta. What's up, man? Always on time. I love that. Prosper, what's up? David Lee, you're ready to start. Keith, we got it. Keith, you're always on time, Keith. That's always cool, man. Sarunas, what's up, Jose? David, Tim, Elmer, Callie. All right, guys. I think we are good to go here. Timmy, shout out. Nic Chahine, let me know whenever you are in the house here. I think we are good to go on our end.
I'm here.
Hey, what's up, Nic? How you been?
Pretty good. A little bit under the weather, so my voice might crack a little bit here and there, but I'm all juiced up as far as caffeine is concerned, and we're ready to go.
Bang? You got the bang ready or no bang today?
Yeah, that was bang actually. Yeah, that was.
Did you see the UFC fight yesterday in Ngannou?
No, I did not. And I'm not planning on seeing it, so you can tell me who won.
Ngannou won by decision, but it was a good one though.
Decision. Wow, I pegged it as gonna go knockout. So
they went hard. Yeah, but I know you're into that stuff. So
yeah, I went I fought yesterday and I have a kind of a black eye right now. So because of it, I had a hard sparring session yesterday. No injuries, just pain. But yeah. That I stopped watching the UFC when they turned so commercial. Everything you want to do, they want to siphon another dollar out of you, and it's just okay. So you have no free fights anymore. Okay, I guess I'll stop watching it.
All right, Nic. Well, I know you have a great presentation for the folks here today planned Sunday, right? I know it's an important day for you with all the subscribers as well on the newsletters and everything else.
Yep.
So,
as far as time, I think you had set aside an hour and a half or 2 hours for this. I cannot go any longer, so we will have to hard stop there because I have a lot of homework. I just got off of a call with my team. Well, the members that are in the chat room, we just had a 2-hour session this morning, 1 hour and 45 minutes. And in it, we reviewed all of these stocks and they got this spreadsheet. And I recorded a video and I posted the video and I promised them 2 more videos that I have to do today and a couple of more write-ups. So my schedule is for Sunday packed after working all day yesterday as well. As you know, I was with Nicole doing another presentation for Benzinga. So we will have to hard stop at the end of 2 hours. So I will rely on you to keep me on track for that.
Yeah, sounds good, Nic. Absolutely.
Okay, so I'm going to share my screen if you don't mind.
Yeah, go ahead. Take it off.
Okay, I just lost the monitor, so I'm kind of down the screen. That's been like all week. I guess I need a new computer. Hello, Benzinga, I need a new computer. No, I'm just kidding. Okay, so let's start with a picture of, okay, what happened on Friday before we talk anything else. The macroeconomic conditions have not worsened. Sentiment has. People are freaking out over whatever. Let's review what's going on. The Fed is looking to dial back its QE and end it. And why would the Fed do that? Because things are too good. If things are too good, that's not a problem in theory. So people are freaking out because the rally was so big, there's a lot of damage that can happen. So the strategy is we might get a bounce, but I'm going to give you what to do tomorrow and the day after in general. These are the tools for me. If we get a bounce Monday, I would use it to fix trades that were broken last week if I can, or book profits if I took longs on Friday, or buy insurance if I need it on the bounces. So these 3 things need to happen. What I don't do, if it bounces, I assume that that's the bottom and I start piling in new longs. especially when I'm already long some stuff. So that would open up more danger, because why? Think about it. What's in the middle of the week? In the middle of the week, there's the Fed, which is what supposedly we were fearing, which, by the way, I disagree with, and I'll tell you why in a second. So if we get a bounce Monday, Tuesday, they're going to fade or be nervous going into Wednesday when the Fed is going to tell us what they decided. Here's my gut feeling. The Fed event, as soon as it goes away, regardless of what they say, the market's going to rally, because the imagination is spooking people more than the actual message that is going to come out of the Fed. It just makes no sense for the Fed to come out and say something so absolutely horrific to cause a crash, because they just spent trillions of dollars fixing it. It is not logical for them to cause intentional harm to it. If so, I would like to start a petition to convict these people, because they are committing crimes. If they spend trillions of dollars of our money, the government's money is our money collectively, to bail us out of a hole and bury us in debt, and then they intentionally break it, that is just crazy stuff. Okay. So the fundamentals are not deteriorating. In other words, when Amazon reports its earnings, it's not going to show shrinking sales. It's going to still show growth, healthy company going. All of the companies that reported, they did not report shrinking sales. Even Netflix grew sales last year, grew earnings last year over last year, grew memberships over last year. What they said going forward was not so sexy, to where the expectations like, whoa, I expected way better than this. Fooey. So the sales are not shrinking. The expectations were too lofty. This was too big. Okay, so this is the S&P SPY visual to what happened. We broke out and we're testing baselines. We could still fall much, much further, but we don't need to. We had a correction bigger than this in September of 2020. The S&P has not, I don't think it has yet ticked 10%, almost, barely, 9%. Let's call it 10%. So Wall Street calls 10% a correction. So not necessarily expecting devastation next week. And why did I say earlier that it wasn't fear of rate hikes on Friday? Because this is I'm going to switch to a daily chart. TLT, everybody knows what that is. This is the price of bonds. The price of bonds were skyrocketing Wednesday, Thursday, Friday of last week. That's the opposite of rate hikes. When the bond price rises, the yield, the TNX, remember, maybe CNBC said, runaway yields, runaway yields. Well, not anymore. So Thursday, Friday, Tuesday, Wednesday, Thursday, Friday, there was no strength in the yields. So all the devastation that happened on Friday was not correlating with rate hike fears necessarily. We don't know what it is. After the fact, we may find out, maybe not. It's just price action. Okay. All right, so having said that, that's the overall picture. So today, we are going to discuss, I believe, options. So before I go any further, I want to get a gauge as to your level of knowledge, so I know where to start and on what to harp on what to harp. So give me a 1 in come on, give me a 1 in the chat if you have never ever seen options and you want the definition from the very basic, like this is your first day. Don't be shy about it. We're here to learn. We don't have magic bullets. I can promise you I'll teach you basics. We have a 3, we have a 2. All right, Tom, I expect big things. Alex Novak, that name sounds familiar. 111 or 111, Daniel? Haha. Ed knows a little bit. David knows a lot of it. So a lot of 1s, some 2s and 3s. All right, so we have a good mix. So those with two and 3s, especially if you've seen my presentations before, you're going to have to endure some of the same stuff because we have enough 1s to warrant an explanation of the basics as well. Okay. And then we'll open it up to some tickers to where everybody can participate. All right. By the way, that's talking tickers is what I love to do, and that's what we do all day in the chat room. The members that end up in the chat room, the Benzinga members that end up in the chat room with me, they have access to me all day, every day. What I do is now, this is above and beyond the expectations. I just added this after the fact. I have 6 of these windows, each with 3 charts each, and we track them in all day, every day, like tick by tick, even intraday scalps and or discussions for if somebody in there says, okay, what about this stock? We'll discuss it. So get your behinds in there because we have fun and education all day, all day. Okay, so the basic service that I provide for Benzinga is to, I share write-ups at different frequency for different levels of commitment. So at the very least, you see a write-up from me once a week, and usually it's about a stock opportunity, a ticker opportunity. And I usually share a whole video, 15 minutes. And I also share different ways of doing things. So I say, okay, if I want to get long this company, first of all, here's what the world looks like. That's the macro. Second of all, here's what the company looks like. And here's why I'm doing this today. And here's what would get me out. So now I have a strategy. And then I say, here's how I would do it in several different ways. I can buy shares. I can buy calls. I can buy call spreads. I can sell puts. I can sell put spreads. I can do any combination of these. And if you don't know what those mean, we'll get to them in a second. But that's to give you an idea of how I work with Benzinga. And we've been doing this since 2011, I think. So it's been a while. So clearly we're doing something right. The level of success, the highest level of success is what I like to do, which is selling risk below current price. You'll know what that means in a second. If you know options, selling puts or put spreads on good stocks. Today I had a discussion with one of the members. Oh my God, I'm in trouble. Help me out. And she had sold the put, which is what I like to do, but at the wrong time. So clearly she had half the formula. Selling a put is better than buying a call most often. However, you still need to look left on the chart. Okay, so along the way, I have a whole bunch of lessons. And for you today, I have a whole bunch of lessons, but they're simple. And I want you to take a sticky note and have one per sticky and put it on your desk next to the monitor. Don't ever take another trade without doing these things that we're going to talk about. First thing, we're going to define risk. Okay, so I'm going to take a scratch pad. I'm going to give you a few minutes to think about it to see if you can do it. If you are teaching a class, if you've heard this spiel before, don't ruin it. If you wanted to explain to me what's risk, give me put it together. I have extreme confidence that you all know what it is. You just need to be able to word it in a way where it's actionable in a trade. So tell me how you would word it in a way to somebody that's going into investing. You say, whoa, before you do anything, let's define risk. So go ahead. Come on, don't be shy. You know what risk is? Hit me. You might have a delay here, but we'll see. I usually get on a delay. But what you can afford to lose, exposure, okay. Ratio of what you can win or lose. All right, I like that. So you all have the basic the basic idea correctly, but I'm looking for something else. Come on. How much is okay? Yes, correct, Robert. Okay, Charles. Charles got the second piece. Possibility. Sarunas. Hopefully I said your name right. Okay, so you all know it. You just need to word it. Okay, so here's the way I would word it. Hello, Ricardo. Here's the way I would explain it to put it into useful segments. Number one, if somebody says, I want to take a risk, the first step in taking a risk is knowing, yes, the maximum loss. Hey, if the worst case scenario happens, and it sometimes happens, what is my worst case scenario money-wise? What is the maximum damage? What is the worst consequence of me taking the risk? And that translates into life. If you're running with your friends and you want to jump over a segment where there's a gap, And if the gap is big, you think you can do it, and somebody says, go ahead and jump it, you'll say, what's down there? If you can't see what's down there, would you jump? I wouldn't. I need to know the worst case scenario. So if you cannot quantify the worst case scenario, I don't think you should take the risk. I wouldn't let anybody in my family take that risk. And what does that mean? Think about it. It means you should never, ever short a stock traditionally. Shorting a stock traditionally or selling calls naked, same thing. I'll explain to you in a second what that is. You are taking unlimited risk. You're saying I will cover. Sometimes you can't cover. Just talk to all of those GME, all of the Tilray in 2017, it rallied to $300, super spike, way before GME did it. You went bankrupt. The broker liquidated your assets and you're toast. So hedge funds went bankrupt. Okay, you can't put a stop loss when there's no stock to buy. The stop loss order is not foolproof, by the way. What happens? You put a stop loss order, it's dormant. Price goes through it. The stop loss order changes to being a market order, and then you're at the mercy of the next fill. If there's no stock to buy to cover your short, you're losing for as long as that stock is rallying. So yes, in theory, you could stop out out of most situations, but if there's 1% chance I'm going to lose all my money, the hell with that trade. I don't need to do it. The options platform allows me to short a stock, responsibly. I'll show you. You can short a stock responsibly, but I said I would never short a stock traditional method. Traditional method requires me borrowing shares I don't own and selling them. So I take the money, that should be illegal. I put it in my pocket. And then if I'm right, the stock falls, I just need to return the shares and I buy them lower. But what if the shares explode? What if it gets a buyout for triple the amount it's worth? Boom, you're done. There's no stop loss. She gone. It's never coming down. You already suffered the maximum loss and then some. Anyway, besides the point. So first part of risk, how much can I lose? And that part, you don't manage. You decide on, check mark, okay, I can take the risk, you move on. The second part, a few people brought it up, which is the more important part, is what are my odds? So it's all good and dandy that, okay, I know how much I can lose, but what if I'm taking the risk that I shouldn't be taking because there's no way I can win? This is pretty important. What are my chances? So how do you usually now work with that without options? You do homework, you think you're smarter than the other side, you think you know something about the company, you think you know Peloton's are going to recover because blah, 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 blah. So you do your homework, and in your mind, you give yourself an odds of success. It's intangible. In your mind, you buy shares because you think that this is going to happen, that's going to happen. But in reality, it's a subjective number, that percent in your head. And if you don't do that in your head, you should. Okay, but that's risk. One, how much? And two, odds. What are my odds? That is the part I manage right here. What do I mean? Let's say I take a trade today on ABC stock because I think I'm smarter. I saw them selling whatever behind the scene. Nobody knows about it. I think I know more than average bear. So I think I have an 80% chance of winning. I'm fictitiously. So then 2 weeks pass, and I revisit this sale. It's like, why did I buy the stock again? Oh, yeah, I saw this. Well, it never happened. I wonder, maybe I don't know enough. Maybe I didn't know. Okay, so that percentage dropped to where it's like a coin flip. Nope, I'm out. So that's how you manage your risk. What are my odds? I mean, how do you determine odds? Okay, so definition of risk is sticky number one. Sticky number one. No, don't follow institutions. They're morons just as much as the rest of the people out there. So you can read your own homework, do your own homework, read people's opinions, but at least formulate your own. And if you don't, then who says that that person knows more than you? Okay, so define risk. And now you have to have that mentality in every trade. And I'm going to give you a little tidbit of information that's super important this week. You're going to be tempted to buy dips in stocks you don't own. Let's say you're buying crypto on this dip, whatever. I want you to get out of the habit of averaging down. Let's say you're stuck in Upstart at 250. Don't average down. Never average down in any stock. That's my opinion. I don't know a lot of traders. In fact, I don't think I know one trader that's professional that's been successful for a long time that averages down. Because you have a problem, you just made it bigger. The only way maybe I could swallow that is that you know something for a fact that, okay, now I know something much better than before. Just because it's cheaper is not reason to average out. So you're saying, well, it does make sense mathematically. I say yes, but only if you average in. What's the difference? The difference is, let's say tomorrow I want to get started long Upstart. I decide, okay, I want to risk 10,000 on it. I'm throwing out numbers. Don't go out, spend 10,000 on Upstart. I go, okay, I want to have 10,000 in it, or I want to have 500 shares or 200 shares or 100 shares. I'm going to take half of it now or 40% of it now. This way, if it falls or if it rallies, I need time to get more information. My conviction should be low. We have a coin flip right in the middle of the week, and it could be massive. What if that idiot Powell comes out and says, "Oh my God, I'm going to raise rates 6,000 times this month"? So I'm ridiculous, of course. But what if he says something very combative and spooks people? Then we are going to have another leg lower. So leave room to add to a full position. So if I take half of it now or 40% of it now, and then it falls, and then I add my other half or 1/3 more, and then another, the rest later, now I averaged in, but not down. So my problem is not double. I wanted to take this much risk. I took half now, half later, or a quarter now, quarter and quarter, or quarter and then all of it later because I found out something better. So take bites, not a huge meal at once, especially when you have a falling knife. The markets have not been able to find footing in a while, especially if it's a small cap company, which what this is. They are falling machetes right now. They are like combatively beating up on ARK-like stocks. I renamed the small caps to small craps, not because they're crappy companies. Upstart has a good P&L. Because of the price action is crap. Palantir, excellent company. Price action, crap. Because the rally was crap. And now we're getting the other side of the crap. So we have to be open to much lower prices, maybe. Therefore, average in. Okay, so these are musts, whether you buy shares, options, whatever. First, define risk properly and note that and manage that honestly. Be honest with yourself. The person I was speaking to today, I'm very glad she shared her pickle with me because she went long great stocks at wrong times and she wasn't honest with that percent. So if I buy shares or if I buy a stock or options and then I see them dwindle down to 90% and I haven't done anything, I mean, what are you managing? You're just buying and hoping for the best. That is not good. You should revisit the throughout, like once a week or once a day, even depends on how active you are, to say, oh, regardless of how I feel about this, I just lost half my money. Maybe I should get out, or maybe I should consult somebody way earlier. Okay, so definition of risk, super important. Don't average down, average in. Super important this week, especially. So now you have 2 sticky notes. Do you have them? I'll give you a minute. Go get them. Definition of risk. Sticky. The other sticky note is average in, not average down. All right. So that's pretty important. Now, I'm going to give you another sticky, which is like more important than both of these put together. NT. This is an acronym that I use because it's catchy and people are more likely to remember that than me saying the whole thing. So the idea is before you take any trade, if you don't have a no trigger, no trade. Okay. Which means whenever I take a position in anything, short, long, whatever, I need a reason. But you're saying the trigger, I'm not a good chartist. Okay, so no thesis, no trade. So if you don't have If you don't have either an idea like fundamental, like PE got to this point, or an RSI got to that point, or levels got to this point, or MACD got to that point, don't take the trade. What are you taking the trade if you don't have a specific purpose? So be very, very on point with your deployment. So somebody's making a joke about timing. Sometimes most of you don't pick wrong stocks. We get bit by either bad luck of timing, some headline, or just bad timing altogether. If we can fix the timing, and I can help you fix the timing, because I've developed a pretty good knack for charts, and I rarely get blindsided. In other words, if I get blindsided by a bad timing, like if I take a trade and it goes boo 20% in the next couple of days, it's because of a headline that came out of nowhere. I can guarantee you that I would not get stuck because I picked the wrong spot to get in without a headline blindside, because there's simple things we can do on the chart. So 3 stickies, 1, 2, 3, no trigger, no trade. Please, this is so important, because I'll tell you why. If you don't have a reason, the trigger or the thesis, how do you know that your idea is broken? Let's say you took long Netflix for the earnings because you thought they were going to grow their subscription 25%, and they didn't. Your thesis is broken. You should be out of that trade. You don't try to salvage it. That's one example. It's silly, but that's one example. I wouldn't get out of Netflix here. I would get long Netflix here for a lot of reasons. But anyway, so that's my gauge. How do I know that I still belong in that trade? It's either the trigger is gone or the thesis is gone, then I should be out. Okay, so I keep going back to, how do I get out of the trade? Which brings me to the 4th sticky note. I'm going to recap them every time. First, definition of risk. Second, small bites. Third, make sure you have a reason. And fourth, make sure you have an exit strategy. If you don't have an exit strategy, good or bad, then you're at the mercy of getting locked into something bad. Example, if I take a trade, I say to myself, if it was a trigger on the chart, if I lose X level on the chart, I'm out. That means my technical pattern is broken or whatever. Or if I don't have something that close, if I lose 20% or 25% or 10% or 30%, depends on your risk tolerance, I should be out. Or some people always take $5,000 risk, and if they lose 500, they're out. So pick an exit on a bad note. Like if I lose this, if I lose a level, I'm out. The other one is, if I hit 15%, I'm out. Gains. Or if I hit my technical target on the chart, let's say a chart was like this and I thought the target was here, and if it hits anywhere close to the target into prior resistance, I'm out. So have an exit plan. Okay, so you define risk. You take it a few bites at a time. Sometimes you take it all in, but you have to be solid with your levels. And then you get a reason why you're taking along, your real reason. And by the way, I forgot to tell you that this reason, I thought it was going to go up. That is not a reason. That is not a reason. All right, Howard, cool. So you need a valid reason. Like, I thought Netflix was going to blow, blah, blah, blah. Okay. And exit, super important. Exit strategy. Okay. Stop out levels. I don't mean stop loss like mechanical stop loss. I trade all day, every day. So I don't use stop losses. I have alerts and I immediately jump in and do them by hand. All right. So now we have a big picture there. So we all cool with this? Let's just jump into, I have the E-Trade platform, practice platform. I'm not recommending it by any means. It's full of bugs. It's simple enough to learn. It's intuitive, but they ruined it over time. So anyway, let's go to February. First. Well, yeah, Howard, but you have to be diligent with the levels. Exit the same. No, the exit, good question, Joseph. So Joseph is asking if we exit incrementally. You know what? I'm glad you asked it. So one of the traders that I respect the most, she has experience like you wouldn't believe. She's run hedge funds before, and she said to me once, whenever I get in trouble, my initial reaction is I get smaller, which means yes, she dumps a big chunk of her position. So when in doubt, just get smaller. Do you dump it all at once? It depends on the situation. It's better than not doing anything, Joseph. I've done that before. It was like, oh, geez, I did not expect that. Let me get smaller while I get a couple of more ticks to get more information about it. That's solid. I'm good with that. I'm good with that. Okay. All right. So let's jump into options. So first things first, what the hell are those? Options are contracts. And just like any contract, it has terms. Duration is one. Size is one. Levels, price is one. Okay. So in investing, these contracts revolve around a ticker. In this case, it's a firm. It can be an index. It doesn't have to be a company. So they call that the underlying. It's just basically whatever ticker these options go off of. Okay. And you can see, I said time, you have many contracts. They're lined up. They could be 7 days. They could be 2 years out. You pick and choose. You have some that are weeklies, and then out there, there'll be monthlies. As time ticks, they'll add more. Okay. Like you don't have a July here. They'll probably add a July for some. I don't know why they do that. I never read about exactly why they do that. That'll be an interesting factoid. But anyway, irrelevant for now. So why did they choose to skip July, not August? And where's September, October? Anyway, so I'm going to pick February. It's got 26 days on the clock. So that's one term. Again, that's one term out of the contract. All these are different contracts within that same time frame. So they all share one thing, time. All these have 26 days on the clock. Another term is price. There you go. That's why you have all these. Each one has a different price. And I want you to not think puts and calls yet. Okay. Forget puts and calls. Forget it. So you have price. That's another term. Now there's a quantity. Any contract I pick, I'm going to pick this one blind. If I trade it, one contract, it's 100 shares. So all of these, each one of these, every contract represents 100 shares. So that's quantity. So now we talked about time. We talked about price, that column right there you can't see behind this. And then quantity, it's always 100 shares of that stuff. Okay, a firm. So they have, all of these have that in common. Now there are other terms. We'll discuss them as we get through that. So the first sticky, I said percentage. So I told you that when you're doing stocks and you assign yourself a percentage like mental, it's more subjective. So it's not very reliable gauge, right? This is how do you feel about your odds on this? Well, luckily with options, we have a number we can pick off the table. And for that, it's this column right here called delta. And I think I'm zoomed in, but anyway, let's go in. That's the delta column. They have one on this side for the calls and also one on that side for the puts. But you're saying, what the hell are puts or calls? Forget about it. We'll explain in a second. But that is the odds maker. And let me put it into words. So the odds of this stock being at 105 delta are slim, like 0.06. So what is that? 5, 6, 7% roughly. A little bit better here, but they're still crap. As you get closer to current price, the odds strengthen, which makes sense. I mean, it's at 60 almost. After falling so much, it's reasonable to expect a pop. So it has a 30%, 25%, 20% roughly. That's my odds maker. And look, if I get to current price, which is somewhere in between here, 58, 55, 60. So somewhere in here is current price. It's a coin flip, 0.5, 0.5. If I go to this side, 0.5, 0.48, 0.5. So this is where the 50-50. When I buy shares, I have a 50-50 shot of making money. It could rise, it could fall. I do homework to give myself a little body English there, but it's really mathematically 50-50. Same here. If I buy a put here or a call here, it's 50-50. I don't have an edge. It's, the buyer and the seller are on equal footing. That's what I mean, no edge. If I go up here, the buyer has no footing whatsoever because they're smoking whatever to think that the stock's going to rally. It could happen, but based on this data, that they say statistically not likely to happen. This better, but still pretty low. This much better. Okay, so if I'm buying options, to answer the question now, for those of you who already know what they are, if I'm buying something, which by the way, I don't like to buy options, but if I'm buying options, that's the sweet spot, 0.33, 0.35. Any more than that, and then I'm just right here, and I'm paying up for all the premium. So this has a better bang for the buck if I do my homework right. Any lower than this, and then a couple of bad ticks, and I'm out of the game. So 0.33, 0.35 is like a sweet spot for me. Okay. So why do I say I don't like to buy stuff? So what is the first thing? If you've taken an options class, you've probably heard immediately that most options expire worthless. So whether that's a mathematical statement of fact or not, then I most definitely don't want to be buying that stuff, right? That's why I don't like to buy. Because if you're telling me that I'm going to lose most often, I don't want to do it most often. I want to be selling. And that's what I would do for our gang. What's up, Rodrigo?
Hey, Nick. What's up, man? Great session here. I've been on the sidelines just taking notes, but just wanted to address a couple questions there on the chat about the newsletters, the option starter. I'm going to post the link, guys, on the chat. That is where the starter is the first checkout that you'll see there. It's $7 a month just till midnight. You get 2 trades a month from Nick, one every 2 weeks. Once you complete that checkout, it'll take you to the higher tier, the enhanced. That is 1 trade per week from Nick. And after that one, sequentially, it'll take you to the tier 3, which is the options ultimate, where you get 3 to 5 picks from Nick, weekly summaries on video and all that stuff. If you want to get trade ideas from Nick, if you want to replicate the 90% win rate that he's showing you and explaining to you right now, get the trades, because that's where he pretty much formulates everything and gives you the trade ideas. Right, Nick?
Yep. And, eventually the instinct kicks in, and you develop an instinct to like no-nos, some things that are not doable at any point in time. So,
and if anybody has questions about the chat room, just send me an email. I put my contact there. It's a separate thing.
If I were you, that would be my ultimate goal, regardless of what level you're at, the chat room of where it's at, just from the fact that we have a dialogue going on all day, every day. So if you have an idea, I was like, oh, I'm in trouble with this, you want to throw it to the gang. We had hundreds of people in there all day, every day. They're in there. You can come and see them, and not one jerk. I don't know how Benzinga is doing this. Do you have a jerk filter out there? Because the whole community is amazing. I mean, we have thousands of people, and they're freaking amazing. I love it.
Someone in the, I don't know if you like ever look at the YouTube chat, Nick.
But, I don't.
You don't? All right. It'd be a good idea to check it out. We got Red Rum asking, does Nick do puts too?
I do. That's that. If I was to do one thing only, if you say you can only do one thing, it'll be sell puts. That would be my choice, to sell puts in stocks I like, tickers I like. Okay, so let's move on. And so now we did the terms, right? So we talked about all the terms, and then the last one we talked about is the odds maker. That is super important, because that is the odds maker. Every day, let's say you bought a call. I know some of you already dabbled in buying a call, and then the stock market fell apart, and now your call has a delta of 0.1. Okay, so you're still hanging on to that call. Why? It has very little chance. So let's say you still had $500 left in that position. It's down a lot, but guess what? You need a miracle for it not to completely die. So what's wrong with taking that $500 and putting one of them here to make, that's $500 right there. I would rather take the $500 that's dying here, that's most likely going to die without a freaking miracle, and put it here where it has a mathematical chance of recovery. I'm not increasing the risk. I'm changing the risk from being up here to down here. So that's like risk management. So that's why the odds maker is important. Or say, you know what, it was a trade. I should have stopped out at Delta 20. I'm out and save the rest of it. So that's another way of looking at it. So I have to revisit the Delta every day. So if I do that every day, then I will catch it. If I started at 0.33 and this stock this week followed the day and another day, and then suddenly that 0.33 turns into 0.2, it's like, oof, you know what? I'm down already X percent. I don't like the setup anymore. Let me take it out and I'll do something else. That is actively managing a trade risk. Now, if somebody's done it for an investment with longer period of time, hey, that's different, but at least you have something to act on. Okay. So this is the basic. These are the basic terms. The most important being, of course, the odds maker at this point, because that determines where I take my risk and how I manage my risk once I open it. There are other terms, and we'll get to it. Now, of course, time is super important. That's one of the terms. Let's spend a minute discussing it. You've heard it called theta, because theta sounds way freaking fancier than time. So theta, the theta decay, just time ticking. Let me give you an idea. So if the stock falls on Monday, these that have only 5 days on the clock would move a hell of a lot faster than ones with 27 days, 26 days on the clock. What does that mean? Means if I take a bet now and I get it right, I win really fast. But if I get it wrong, I lose really fast. So another way of thinking about it. Okay, so if I buy insurance, and if I buy insurance for a month, it's going to be $200 on the car. If I buy insurance for a year, it's going to be $200 times like 10, because they give you some sort of a discount. So clearly, for example, $55 put is $6 here. If I choose June, it's almost double, because there's just 145 days on the clock. So it should cost more. To give you the idea of why theta matters, and it matters a lot if you take a trade for that week only. So you better be good with your charts to trade short weeks. The thesis doesn't work out as well in short weeks. You better be bulletproof with your charts. We can be bulletproof. You join me in the chat room, I'll make you bulletproof on your charts as much as possible, minus the headline risk, of course. Okay, so let's start defining stuff. And I'm going to start defining it from the put side. And so first of all, clear your mind from the statement that puts are bearish, calls are bullish. They are not. Puts are bullish and bearish, calls are bullish and bearish. It depends what I do with them. Okay. And I'll explain. So just forget the fact. I promise you, I know what I'm talking about. Puts are not bearish. They can be bearish in only one scenario. The rest of the scenarios, they're bullish. And let me walk you through it. So what is a put? I told you it's a contract between a buyer and a seller. So this one, that's a put. I'm going to do one. I'll get it out of the way. All right. So the buyer of the put buys the right to do something. The seller of the put commits to that right and is at the mercy of the buyer's decision. I'll explain. If I buy insurance from Allstate, I have control what I do with that claim. I can file a claim. I don't have to file a claim. Allstate is obligated to review my claim and pay me unless I'm cheating. Correct? That's the deal. That's why I bought it. That's why they sold it. They took on risk. I bought peace of mind. They took on risk. I bought peace of mind. And let me explain to you why I don't think that's bearish. If I'm nervous about the next couple of weeks and I own shares of a firm, if I own 100 shares of a firm, I can buy one put, because remember, 100 shares per contract. That's one of the terms. I only need to buy one contract. I buy one contract. It'll cost me $270. because it's 2.7 times 100 shares to $270. So now I am locked. The stock can fall to zero. I can get rid of my shares at 45. Why 45? Because I picked it. I could have paid $425, $28 to protect them at 50. I could have paid $600 to protect them at 55. Up to me. I picked that one. So now I have peace of mind. So you're saying that's bearish. I'm saying, no, it's not. If I was really bearish about it, I would sell my shares. But I like my shares. I just want to protect them for now. I like my car. I buy insurance. If I didn't like my car, I'd get rid of it. Correct? So that's not a bearish scenario. It's bullish, but worried. Cautiously optimistic. Okay, so what about the seller? The seller for sure bearish. No, the seller wants to buy my shares at 45. So when I buy my put, I can stick them my shares whenever I want. Price does not have to be below 45, although it should. Otherwise, I'd be an idiot. But I can stick them my shares any point in time. I call my broker and say, I bought this put. Please get rid of my shares and give them to the seller at $45 per share. And it does not have to be at or below, but I can't imagine anybody doing it when it's higher. So that's the deal. The seller of the put said, I sold the put because I want the shares. So yeah, bring it. So they're not bearish. They just want a better deal. So they want the stock at a lower price. So they're both looking to buy the shares. One has them, one wants them. They're both bullish. And the broker is happy. They're making money off of both of them. So win situation all around. Do I need to own shares to buy a put? No. Buying a put, I don't need to own shares to buy a put. Do I need to own shares to sell a put? No. In fact, that's how I get to buying shares. Maybe I sell the put. So you're saying, okay, so if I sold the put as insurance, what happens if the buyer says, no, I don't want to file a claim. I want to keep my shares. Fine. I don't take the shares. The seller of the put does not get the shares, but they keep the $270. So they get to create income out of thin air. Big caveat, this is not a trade alert, by the way. This is not a trade setup, especially not in this environment. The only time I sell a put is when I want to own shares and I don't mind owning shares. If I do this all over the place and then the market crashes, I'll be on the hook for all these shares and suddenly, oh, I got margin calls and such. So don't sell a put that I don't want. I never sell a put that I don't want to own shares in. Okay, so now we talked about I don't need shares to buy a put or sell a put. So let's say I don't have shares and I go out and buy a put. That is the only bearish situation with the put. The only reason I would do this is because I expect the stock to fall. That's the only reason someone that does not own shares buys a put in a stock or a ticker. If I go out and buy a put in the SPY, I expect the SPY to fall because that's the only way I can make money. The maximum risk, remember I told you can short the stock responsibly? That's how. The maximum risk, if I wanted to short a firm now, the maximum risk is the money I spend up front. I'll give you a real life example. I think Chevron is overextended. And if I wanted to short Chevron right now, I would simply go out and buy a put. I can buy this put right here, risk $200 and wait. How do I make money? If I'm right and Chevron goes, whoop, that $200 turns into $600, $1,000, $1,400. I don't know how far Chevron is going to fall. Chevron is at all-time highs. Exxon isn't. They're identical companies. So what's up with that? And the oil is too high under false pretense. But anyway, if I wanted to short Chevron, I'd buy this or I'd buy that or a lottery ticket this. Why a lottery ticket? Look at the delta. Too low. But guess what? It's only $50. So if I'm right and Chevron drops a hell of a lot, that $50 turns into 400. Sweet. But that has low odds. I'd rather spend a little bit more, have better odds. I wish there was one right in the middle here. That would be my choice. But between these two, I take this one for now and wait it out. This one works as well, but this one. So maximum risk is the money I spend. How much? If I do only one, that's $200. How much can I make? I can make an extra 400, 600. I don't know how fast it's going to fall. But if the faster it falls, the bigger the explosion in that thing. And I'm not alone here. There's like 2,500 of them. So, excuse me. That's a safe way of shorting. And that's the only bearish action in a put. When somebody buys a put and owns no shares, because the only way they can make money is if the stock price falls, or an explosion in the value of that put for whatever reason. It did happen to me once, but I'm not going to, with twice, with GME and AMC. I bought a put, the stock skyrocketed, but the implied volatility exploded so much that I made money. It was ridiculous. That shouldn't be mathematically feasible, but it did happen. I took pictures. Okay, so Affirm, back to the same visual check. Could you buy a put at 120 and another at 125 and have? Well, if you buy two puts, you can win a lot faster, but of course now you open more risk. Yeah, you can buy as many puts as you want. You can buy one here, 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 and here. I usually just pick one and stick with it. You can pick one in the money too, but that's a different discussion. Okay. Oh, in the money and out of the money. Let's explain that term. Let's go in the puts. So if I buy a put here, it's not in the money. The put that is $50, the price level, and current price is 57. So the price is higher. So it's not in the money. If that price drops to 49, then if 49 is right below here, then it'll be in the money. That change of color will go whoop down to here. And then this one will be in the money. This one will be in the money. These are all in the money already because price is 57 and this one is for 60, 65. See how expensive they get? And look at the delta. It's almost 1 because there's no chance, according to this, in 26 days that a firm is going to rally back up to here. So chances are this is going to stay in the money for a while, okay, without a mega rally. Okay, so this is in the money, out of the money. And then you're going to probably also hear me say naked. I bought a naked put, which means I just bought a put, one put.
Hey, Nick, really quick.
And I don't have shares or anything. Yeah.
Just want to give a shout out here to Navin and David J for joining here, the options family here with the newsletters.
Right on. So both of you investigate on how to get into the chat room, because really the level of knowledge that happens in there every day, all day is insane. I'll take a minute to show you. We track the charts at 30-second increments to 5 minutes and 10 minutes and 15 minutes, but the education is for a lifetime. For example, on Friday, when the stock market, I keep us in line. Don't buy pops, because look how methodical machines sell the pops. So if you keep it, oh, this is it. Oh, this is it. And boop, more traps. This was the forecast. So we see things coming like this. The day before it, I said, it has an upside potential, but they're selling pops. So chances are we're going to do this. I drew this ahead of time. You don't have to believe me, but you can be in the room. I have 225 people that are witnesses. And look what happened the rest of the day. There were 2 ticks at 8:05 and 8:10 Pacific time that told me this was going to happen most likely, and it did. So join the chat room. However quickly Benzinga allows you to get there, Rodrigo will set you straight. Okay. I promise you, if you're serious about investing, this will probably be eye-opening. It's game changer. It's not free. You have to go through the front door, and Rodrigo will get you there. Excuse me. I'm still under the weather. I apologize. Okay. So we kind of defined what a put is. It gives the buyer the right to sell shares at that price. And the seller then has the opportunity, if they sell the put, they have the obligation to take the shares. All right, that's what I like to do. I like to do homework, find charts that are oversold, find levels that makes the company bulletproof, sell put there, and wait to be put to stock. If I don't get put to stop, I made money. Okay. So the idea is very simple from that perspective. In reality, if you don't do homework on the charts and you're diligent and you're throwing it against other people's opinions, then you probably are making some mistakes here and there. But when we're trading in a group, mistakes are fewer and far between. The fewer and far between mistakes are more pleasant than having them frequent and a modus operandi type of a deal. Okay, so that is the put side. All right. So at this point, of course, I just lost the monitor. I mean, what's going on with this stuff? All right, so let's, I want to take a ticker to walk us through an example on how would one play like a fictitious scenario. So give me a ticker, give me a few tickers. I'm going to pick one that I know off the top of my head that would apply to the example I have in mind. Netflix is good. Okay. I think I will use Netflix, maybe. Yeah, I like Netflix. So let's go to Netflix. Good suggestion there. Who was it? Jeff. All right, Netflix. Whee! Okay, so if what you guys don't know is for the ultimate group of options and the chat members, if you're in the chat member, you're going to get everything that I produces pretty much. If you're the ultimate group and the chat, so I send out a strategy video, and part of it was one for the Fang Gang, Fang Mat, I call it, the Fang Gang plus Microsoft, Apple, and Tesla. Together, they're pretty much the NASDAQ. So I said, okay, Netflix is ahead of everybody in its breakdown. Let me see, do I have the lines? Okay. So I thought that Netflix was ahead of everybody here because that was a trigger. And the downside target, I called it from up here. I said, if it loses this support weeks ago, it will go to 520 to 480. That was the ideal target. It went straight to 520 and traded it via credit put spread that I said should be closed before the earnings, and hopefully they did. And then I put, if this is lost, this will come. Okay, that was the warning I had for Netflix. So guess what? You know, the worst case scenario played out and then some. All right. And then some. So, and then months ago, I said, if this is lost, this will come. And look where they're at months ago. So it took a month to get here. But this is the breakdown that all of them now have started. It has ended. It's, of course, it can still fall from here with the markets, but it doesn't have any specific reason to fall. And let me show you why. I'll take out all these lines again, and we'll go to weekly to declutter. 2018 high was higher than current price in Netflix. So it fell below 2018 high, nothing to do with the pandemic. That's 2019 wall and 2018 October. Remember Powell here said, oh, we're on cruise control with raising rates. We crashed into Christmas. What did he do in Christmas? He restarted the QE because Wall Street brought him to his knees. I think Wall Street is doing the same thing now. They're saying, hey, buddy, stop raising the idea of talking tough with raising rates. We don't like it. And believe it or not, he must comply to Wall Street. It's not part of his job, but he must, because a lot of the US wealth for consumer spending comes from the feeling of wealth. And you can't demolish people's home values and expect them to spend a lot. Okay, so Netflix here, below pivotal levels. And that's the pandemic, and it's at pandemic levels. I'm comfortable owning shares anywhere below here for Netflix, provided I don't go all in, because the markets can crash and it will take everything. Why? Because the stocks do not trade in a vacuum. Okay, so how would I do this? So we'll go switch over, excuse me, to Netflix. Now I'm going to pull up a different set of options chains. Same, it has many periods of time, different months sometimes. And what I will do is, if I pick April, I'm going to pick April. And current price is $397, somewhere here. You can see the color change. This is the put side, same as the other one. This is the call side. I have 81 days on the clock. And let's go back to the picture. Okay, so what if I can buy the shares at 250? So here's the conversation that I would have with myself. And self, no. If I want to own Netflix here, I would love to own it lower and get paid for it. Wouldn't I love to own it lower and get paid for it? Hell yeah. So let me see if I can go to 300. Now I just shifted the table down so I can see lower legs, 310, 275. Okay, that's the lowest leg they have. So somebody will pay me $600 to buy 100 of their shares at 310 here. So that means I break even around $304. Let me walk you through the logic. They own shares right now. They're panicking. They want to buy insurance right now after the fire that happened that struck the house. Now they want to buy insurance. I'll say, I got you. Give me your shares. Anytime you want to give me your shares in the next 59 days or whatever that number was, 81 days, I'm yours. At what price? The price we struck over is 310. So for that commitment on my part, they'll pay me $600 today. All I have to do is collect the money today and wait. Tick tock, the theta burn, the time ticking every day that passes where they don't give me the shares or the price doesn't fall, this value should deteriorate. But in reality, it depends a lot about what the price does. So if I sell it today and Monday, Tuesday, we get a huge pop, this may turn into $300. You're saying you lost money. It's like, no, I won. I can buy it back for 300. I collected 600. I can scalp $300. That's just a visual. But in reality, I sell it to own shares. And if I don't give me the shares, I made money out of thin air. So you're saying, well, it takes a lot of margin. Well, it takes less margin than buying shares. That's for sure. And it's much safer. So let's work through this logic, how this scenario proves that options are not more risky than stocks. In fact, they're safer than stocks in this instance because I'm using them properly. Options can be riskier than stocks because they can be more profitable because they move faster. They deliver profits and losses way quicker. So if you're not good with your timing, you can lose a lot faster. But if you're good and or lucky, but if you're good and do like surgical trades, like I just showed you one, let's put the two scenarios. I like it, I buy it. You like it, you spend $400 a share now. And the stock price falls to 302. You're down 24%. You already lost 24%. Same day, I go out, instead of you buying shares, I sell a put, I collect $600. By the time you're down 24%, I'm still broken even. So that's how it's safer. And you spent money. I didn't spend any money until now when I get assigned. That's it. So how does that work? The stock starts falling. This 600 turns into 2,000. I don't care what it turns into. It shows huge losses on paper, unrealized losses, because that put, I collected only 600 and it turned into 1,000, 1,500. So I'm like, whoa, I'm down $1,000 on $600 start. That's not good, but it doesn't matter because if and when I get assigned, that put position disappears off the books. It takes all the losses with it. And instead of the losses, I will have my cash that I collected, $640, and I own shares. So then my break-even point is $6 below that. That's how I break even at $6 below that. All the losses that this trade had been showing me for weeks disappear. They're gone. And then I'm on the hook from 304 or lower. If I keep the shares, I'll be losing on paper like you, but you've already lost 24%. So you would, at that time, would be like 28, 30. I'll be like down 4. So what happens on the morning of? I wake up, oh my God, I got assigned. Hey. First, you change your diaper, and then you come back and say, okay, let me be cool, calm, collected. What's price? If you wake up that morning on Monday and you got assigned shares and the price is 308, guess what? I sell the shares at 308. I made money. How much? $400 per share. So because it was $2 below what I got assigned, but I collected 6. So I still have 4 to play with. So if I sell the shares immediately, that satisfies whatever margin calls if I had a smaller account. My account is fine, and I keep 4 net dollars because I collected 6. The stock was $2 redder than when I bought it at 310. When I got assigned it, I didn't like go out and buy it. I woke up, they were right there. Boom, $310. So that's the break-even point. But that is a scenario where somebody really wants to own shares. Now, I like to do a credit put spread, which is similar, but where I have a little bit more flexibility. So in this case, I sell a put way below current price. I'm committed to buying shares, but I also buy a put below it. I give back a lot. Why? What if I don't trust the markets? And I don't. What if the markets want to drop 20%? This might not be such a good idea off the top, right? So I want to buy insurance at least temporarily. So this position here is called a credit put spread. Let me walk you through the word. You've also heard it called bull put spread. Credit, because I'm selling $700 going into my account, I'm only giving back $600. So there's a dollar credit, and it's a put spread. Put, it's on the put side, they're both puts. Spread, literally spreading the risk. 1, 2, one buy, one sell, one buy. I'm spreading the risk. So credit put spread, bull put spread. What does that trade do? It gives me money. And how do I win? I do not need a rally. If the stock doesn't rally, I win. If the stock rallies, I win. How much? The dollar I collected, the $100 per contract. So if I do 10, I'm collecting $1,000. So, and what if, so if the stock stalls, I win. If the stock rallies, I win. If the stock drops a little bit, I win. If the stock collapses, maybe I lose. So for me to lose, I need price to go well below both legs and fast. Then I'm in the money, and then I have to manage it. And I can manage it for my own self. If I did this in the stock I want to own, and that scenario happens, how do you defend the credit put spread? I don't. I take the shares and I sell this one for a huge profit. And now my break-even point will be much lower than 300. Depends on the scenario. Of course, they're all different. But that's usually what I do with stocks I like. Like if that happened to me in Palantir, I wouldn't defend it. I would just take the shares and sell the leg that I bought for protection for profit. So I turn it into a sold put after the fact. Okay, but that's details that come later. The credit put spread is a bullish trade that does not need a rally to win. And this one delivers 25% on yield. What does that mean? So I'm collecting $1 and the maximum loss is $5. You're saying, whoa. I was like, okay, so let me rephrase it. If you had to spend $400 to buy a share of a stock, you need a 25% rally for you to make money off of that. And I can deliver those same statistics even if the stock falls 20%. So you need to hope for a rally of 25%. I don't need anything. I need it to stay not collapsing beyond 25%. For me to win. So you can risk $400 by buying and hoping for a rally, or you can risk $400 and collecting the profits up front and waiting for time to die and not needing anything to happen. In fact, you can let it fall a little bit and still win. You see what I mean? Exciting to buy and hope for a move. Maybe it comes, maybe it doesn't, or just boring base hit every time. In car racing term, you want to start top, you want to finish top 5 every time and win a championship, or you want to try to win every race and crash out so many times that you end up like 10th in the championship points. So base hits, statistically speaking, this has like an 88% chance of success, and it pans out. They go wrong sometimes, but it's an unusual occurrence. Okay, they do go wrong, but it's an unusual occurrence. And all I need is that on the day of expiration, price to be at 315 or higher. My break-even point is 314. Okay. So these are my favorite trades. When I know a stock and I have good visibility on levels, especially after it just got collapsed, then I get comfortable doing that. So this is a credit put spread, bull put spread. Spread because it involves two legs, one leg, two legs, and they spread each other. Now, if I do this, now that becomes a debit put spread. Why? Because I'm buying the higher one that's more expensive and selling the cheaper one. That's a debit, comes into a debit. If I do this, I'm selling the red one that's higher and buying the lower one. So that's a credit. This is bullish. This is bearish. This one needs a drop to win. Oops, excuse me. I just hit my microphone. I don't know what that sounds like. So this one needs a drop to win, kind of like buying a put. Okay, so credit put spread is the way to go in my book if I had only one way to trade. So you're saying, well, 330 is still too close. It's like, okay, what if I'm going fishing for the rest of the year? Why not go to like, would you collect $1,000 to buy Netflix at $260? Did you hear those? Would you collect $1,000 to buy Netflix down here? Yes, that other put I just showed you, that's what that means. The first example was 300 for like May, whatever month I'm in, April. If I go to whatever month I end up choosing, September. So it depends on my schedule. It depends if I have 3 jobs and I can't pay attention. The further out in time, the lower in price, the slower the trade happens, the less likely I need to babysit it. I mean, look how far out of the money that is. The break-even point on this one is 250. So the worst case scenario is if I don't do anything, I wake up and the worst case scenario has already developed. I wake up owning shares with a break-even of 250 down here. It's not foolproof, but it sure is not that bad unless the complete collapse of this, we have zombies in the street or something. I'm not sure. So can I draw? You can draw. It's just ridiculous. I don't know what you mean by profit and loss. You mean at what price? Yeah, well, you can do that. I don't do that. I know the Benzinga team shares it to visualize what you need to happen. But in reality, it's a theoretical one. And there's so many variables. There's the VIX, there's the implied volatility. There's a whole bunch of things that it's not really useful in real life. You develop a knack as to what you need. And looking at a pretty graph is not realistic because they will say they are insinuating all else held equal, which is never true. Never true, ever. So nothing is ever held equal. So I'm not sure what the use of that is. What if I'm selling risk down here? The lower the price, the more red it's going to be. But how fast? And what's VIX? And what's the implied volatility? So a whole bunch of stuff. But these guys, like if I go like this, they'll draw something for you. You can look it up here somewhere. I'm sure they have a spectral. So this is it. What is that going to tell me? To me, nothing. It's meaningless. It just says at this price, it may be this, it may be the ideally theoretical P&L, which, I can't use it to manage. At expiration, yeah, you can look at it. I mean, I don't understand. So I'm telling you the stats. I think I'll answer your question this way. The maximum I can make is the money I collect up front. And if it's a sold put spread, like the one I just shared, where I collected $1 and there's $4 at risk, it's 25%. Profit and loss ratio is 25%. I'm getting a 25% yield on my money at risk. And all I need is price to be above the sold put. In that case, I think it was 310. The yield is 25%, 0.00 if I'm collecting $1 on a $5 wide spread. Okay. All right. So we just talked about the put side. So let's spend a few minutes to talk about the call side. We'll go back to Affirm for the visual because it's easier, fewer levels to deal with. So on the put side with Affirm, I use this as an example. So how about on the call side? All right, the puts we already know. They give the buyer the option to the right to sell shares at a certain price. Okay, not obligation, just the right to. On the call side, who buys a call? Somebody that wants to buy shares, because the call, when you buy a call, it affords you the right, also not the obligation, just like the buyer on the put side. You're in control. When you buy, you're in control. They afford you the right to buy shares at that price. So it's a contract, 26 days on the clock. You choose the price you want. Excuse me. You choose the delta you want. And it's you're in control. So let's walk through a scenario. Let's say I wanted to buy 100 shares of a firm. As of Friday, I would have needed to spend 100 times 57. So let's round. $5,800 had to leave my account. Let's say I think it's going to get to 65, but I don't want to spend $5,800 right now. Why not spend like 500 or 600 and lock my price? And that's what it does. If I buy the call, I lock my price. I choose what price I want to lock. I can lock this one, that one. So this is where the delta decision comes from. What did I say I like? 0.35, 0.33. So this one is viable. In this case, this one is better for a lot of reasons I won't mention now for me. You see, this is $5 wide. I bet you next week they'll add singles. And if they add singles, this one will scroll off the page and will be out of sight, out of mind, and suddenly the delta gets shellacked. It's weird that it happens, but it does. So if I buy this call, I choose the price. If I go high, the price drops because the odds drop. So again, what does this give me? It gives me the right to buy the shares at X price. So in this case, I have 26 days to call my broker and say, please fetch me shares at $65. And I don't care where price is, they'll do that. Well, crazy if I do it when price is below it, but I've never seen it happen, but it is doable. Okay, so let's say the stock price spikes next week to 75. Then I immediately made money because I'm in at 65. But I have to account that I paid 5 for it. So 70 is my break-even point. So how else can I? So is this bearish? No, it's bullish. So who sells it? I don't want you to sell calls unless you own shares. Who sells it? I'll tell you who. So let's say I own shares and I want to get rid of them. I sell calls against them. So I'm promising, hey, I'll give you my shares. You want them? Not until they hit 65. Okay, I got them reserved for you. So the buyer gives their money, $500, to somebody who owns shares out there to sell the shares to them at 65. So one day, the price rallies far, and the buyer of the call exercises their right to take those shares. The seller of the call wakes up and their shares are gone at 65, which is not a bad thing because they entered wherever they entered, they went to 65 and they lost the shares and they collected 5 for it. So they break even at 70. So meaning not break even, they stop participating with profits at 70. Not a big problem to happen. For example, let's say on Friday, I bought the dip in a firm. I would have immediately sold calls against them. What does that mean? If I bought 100 shares in a firm, I can immediately turn around and sell one call to promise somebody that I'll sell them my shares in the next 26 days at 65. So my worst case scenario is I profit from 58 to 65, keep the $5, and gone are my shares. Not too shabby. So I got 58 minus 65, that's $7 win, plus $5 win. So I stopped winning at 70. Not a bad deal. I do use open interest, and I'll get to those in a second. Okay. So, excuse me. So the buyer of the call owns the right. The seller of the call has to abide by request. In fact, they don't even know it happened. They wake up, shares are gone. So I told you at the beginning, don't short stocks outright traditionally by borrowing shares and selling them, and don't sell naked calls. So if I sell this call and I don't own shares, and then a firm gets bought out by Allstate for $1,000 a share, I'm using a ridiculous number, I immediately lost $935 per share because I'm short here. I have to deliver 100 shares at 65. Well, guess what? Now it's trading at 1,000. I have to go buy them at 1,000 to give this fellow 100 shares. So don't sell naked calls. The only time somebody sells a call, they should own shares. And that's a really good way of creating your own synthetic dividends. How does that work? Wait, yesterday, you missed it, Rodrigo. Yesterday, I was on a show with Luke. And then I got El Jefe come on and said, Nick, you made me sell a covered call in Tesla and I made $2,800 on it. So he sat in Luke's chair, Rodrigo, and said, thank you for making me do that. And he's going to repeat it week after week. So he owns an asset in Tesla shares. He's selling calls to make it work. So it's like you're leaving money on the table if somebody doesn't sell covered calls. But that's a longer conversation because there's a lot of stuff you need to know. So get into the group and I can help you figure out the selling covered calls responsibly and not create some pretty weird situations if somebody makes a mistake. Okay, so that's a call. Now I mentioned the spread down here. What if I don't want to buy shares? I can still buy a call. In fact, if I wanted to get long the stock without the intention of buying shares, I can buy a call. And if the stock rallies, that call, the $500 turns into $900, $1,200, $700. I don't know how fast it rallies. Let's say I bought this call on Friday and Monday, the market pops open 2%. This stock opens 5%. You'll be you know it that I will be booking that right away because of Wednesday. I would immediately sell the call. What does that mean? I paid for it $500. It turned into $800 in a day. I'd sell it. I just almost doubled my money. Didn't need to buy shares. Didn't need to buy anything. I just bought the call, sold the call for a profit. That's a viable, bullish bet on the stock without having to own shares. Again, I'm not obligated to own the shares. I just want to own the price action. So if I'm optimistic, the price action, I buy a call, wait for a rally, the call explodes in value, I sell it. Of course, if the opposite happens, if we open down 5%, that call would be 250 tomorrow, Monday. Is that tomorrow? Yes. So you could, that's why I prefer spreads when we have like unusual sets of circumstances like that. So what's the spread? In this case, if I buy a call, I can sell a call above it. I'm literally spreading my risk. 500 out of my pocket, 200 into my pocket. I end up with a $15 wide spread, 65 to 80, 65 to 80. So, okay, there we go. $300 cost. That sounds pretty low. $300 cost. And the maximum is, let me see here. Somebody's saying they can't hear me. Hopefully Rodrigo is monitoring that for me.
Okay. I can hear you loud and clear. Yeah.
Okay. So if price spikes, this 300 will gain in value if it does it quickly. I have 26 days. So I'm spending 300. The maximum it can become is $15. So I can make 5 times my money if it rallies back to 85. In reality, if price pops like 5 or 10%, this 300 turns into 400 or 500, then I would book it. So I took a long without a lot of capital out of pocket, and percentage-wise, I pretty much had 40%, 20%, 50% on my investment. So that's another way. It's kind of like doing this guy. This one would gain faster, but one bad day and I would hit my stops. Oh, geez, I just lost 40%. If I do a spread, I lose a lot less fast. And of course, I gain in a more moderate way as well. But at least it helps me sit through bad days. And it does not have to be $15 wide. It can be $5 wide. So I spend $130. It could be this wide. So again, this is not a recommended trade. I'm just showing the preview, an example. So in fact, because this is so cheap, I would go in lower. So in this case, I'm spending $300 that can turn into $1,000 for one contract. So if I do 10, I'm spending $3,000 that can turn into 10 grand. So in this case, I shouldn't do 10 because I don't have any idea how we're going to open on Monday, right? So if it was under normal circumstances and it hits support, yes, I can do that as a calculated risk. But when it's a crapshoot the next couple of days, I'm just gambling, right? And gambling is not what we do. Okay. All right. So this is a quick rundown of puts definitions, calls definitions, practical uses of puts and calls. So I'm going to open it up so we can do some charts. And then we can discuss on stop losses for levels and such. So go ahead, hit me with some charts. I saw Moderna. Let's do Moderna. AMD, we can do AMD. Moderna, AMD, Ford, it's easy. Don't go long. Book your profits, Howard. Baba, we can do Baba. Okay, stop. mRNA. So Moderna chart says it rallied way too fast, it fell way too fast, and it's falling into a cluster from which it sprang. The problem is the cluster is pretty wide. Problem number one. The problem is it's a binary stock, slave to headlines. Any day it's like an earnings report because of the nature of the business. The problem is, you see the problems? First of all, I don't know how it's going to roll over honeymoon period of what do you call it? A pandemic. So we had a crisis. They came out with a solution. The sales were slam dunk, and there was an appetite for buying everything they can make. How long does that last? And how is the next couple of years going to roll over this current P&L? The P&L now is huge, but now that happened, next year's number is going to look weak relative to this year. I don't know. That's a question mark. I'm not saying it is. That's a concern. I wouldn't short it at this level, but know that this is an Adult Swim only chart. Okay. That's Moderna. Technically, this is a weekly chart, so it gives you the big picture. Technically, they have had so many technical breakdowns that there is no immediate floor. This orange line I didn't draw. That's the highest volume point by quite a bit. So in theory, plus or minus area should have interested parties to trade it, which should lend support, but it extends all the way to 120, which is a pretty big, wide range. That's the byproduct of rallying so fast. So if I'm long, I would probably stay long. If I'm looking to get long, I can, what do? Average in. I can start a position. However I do it. If I sell a put at 80 to own shares, that's not a good stock to sell puts in because of the nature of the business. But if somebody is dying to buy shares, I was like, hold your horses. What if you can buy the shares lower? Wouldn't you love to do that? How about you go to March and you get paid $600 to buy it at 125? $600 to buy it at 125. It gives you a little bit more breathing space. It's not foolproof. You're going to own it at 125. You break even at 119. Way better than forking over the money for 100 shares now. Don't ever sell a put you don't intend to own. Okay, that's super important. I mean, new people don't realize that it could happen. Hey, I've seen stocks fall 20% in 5 minutes. So, like the market. So, if you really want to own it for a year, then you can go out to like July and go to the single digits and get paid that like that. If I go to 90. Somebody will pay me almost $1,000 to buy it at 105. Just an example, okay? But I have to commit for 173 days. Yeah, Robert, I saw it, and I mentioned a few tickers. So if you're that desperate for that, I know you said, please, that's so nice. Join the group. We do this all day, I promise. I promise we do this all day. So let me try to get to it. All right, so let's go here. That was Moderna. The second stock, I believe I said AMD. AMD fundamentals are unbelievable. Lisa Su did such a good job. In fact, I may be buying an AMD Ryzen today. I want to build my own PC. This PC I'm on here is choking with all the screens I'm sharing. So I think I'm going to build my own. So the fundamentals, it's almost half as cheap as NVIDIA, if not a little bit more. It grows just as fast. So they're both top dogs. In fact, they're not. Neither of them is top dog. Who's the top dog? Intel. Intel is bigger than AMD and NVIDIA put together twice over. And it gets no respect. Intel is a bargain. AMD is half the price of NVIDIA. So chart-wise, this one is falling into a must-hold level right here, which was a huge problem here. So in theory, this finds footing. However, if it does find footing and it bounces, sell it or get out of trouble. Because if it comes down to here and it loses that, it's going to like 95. What? Yes. It's not my forecast. I'm just telling you what can happen. Did I draw something like this here? Yeah. So here, let's go 240. I'm zooming in on the lines. And let's see if I can walk you through the logic. There was a neckline here that failed and a neckline above that failed. So pick your poison. This one has a target of about here. They don't always need to fill all the targets. See, look, buy the dip opportunity, buy the dip opportunity, buy the dip opportunity. So I'm looking for places to get long. This one is failing. So I'm optimistic. But the problem is it rose so fast. It leaves a lot of weak spots on the chart, a lot. Look, let me show you something. Look at all of this, all of it built on top. What is this? That is not a good base for anything. If the markets crash, I think you will get to buy AMD at 60 or 70. I'll tell you my story of AMD. During the pandemic, if you've heard it, sorry, during the pandemic, that's right here, February 2020, yeah. So AMD was going through the moon. That was an all-time high. Pandemic hit. Somewhere here, I sold the put for October. This is October at the time. And I sold a $22 put. 22. It was in the 40s, 45, 48, something like that. I sold a $22 put, collected $2.20. So if I did 10, somebody paid me $2,200 to buy 1,000 of their AMD shares at $22. 22. So I would have broken even at $19 per share for AMD. So it's like all day, fella, all day. And then it bounced. So that $2,200 shrunk to like $1,600 or whatever it was. I didn't even look at it. And then we had the second leg in the pandemic to the bottom of March. I was able to repeat the sale for July because the selling was harder. The VIX was 90. So everything was so expensive. So I sold it for July at 20 and collected 2.2, oddly enough, almost exactly the same amount. So if I did another 10, that was $2,200 to buy their shares at 20. That would broken even lower. So those, I would do these like blind all day. So I'm a fan of AMD. I'm not happy as to how high they are right now. I won't short it. I will take advantage. This fixed trades on pops, book profits on pops, buy insurance on pops, just in case we need it. Okay. Look, if this bounces like this, comes back to here, that's a huge inverse cup and handle. The downside scenario of this, technically, believe it or not, you can poo-poo technicals all you want. They work because they're self-fulfilling prophecies. The machines are in charge. They will hunt down the mathematics of it. 160 to, I'm rounding to 118. So $40 from here is fair game. So this zone is fair game. If they bounce, fade, come back and lose this, it won't do it alone. It will need the stock market to do that. So if the stock market crashes and the NASDAQ has a similar scenario, technically, this will be much, much lower. So if I'm long, I'm not adding, but I love the company. Okay, that's AMD. Baba, I am long. I had greens. I sold covered calls against my win. So I locked some profits. And now what's left over is slightly red. Slightly red in this market, I'll take it. So this is a company that's dirt cheap. Unfortunately, stuck in the political war and in the hands of the sellers. Look, sold, 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 getting sold. There's no bottom. How does the bottom happen? The bottom is a process. First step is you stop making lower lows. Job done. Second step is you start making higher lows. Lower highs are fine, but then higher lows will hit the lower highs, will come to blows somewhere and explode. Sadly, Friday, they were at the mouth of a breakout that bring them to 160, and they said, maybe not today, and they went back to base. Now, if they lose this, bye-bye. Why would I expect them to lose this? They did the same thing here. Stopped making lows. They came to the top, got sold off, made a new low. Stopped making lows. They came to the top, sold off, made a new low. You see this? So this is, I call this optics mode. Yeah, look left, Ed. You don't fight the trend, right? But also for that what's working for it is if I look left, it has a baseline from a long time ago. Let me go to a weekly, stop messing around. So look, this is 2018. That's the crash of Christmas of 2018. That's where the Fed restarted the QE. We're talking 2016 levels, 2014 levels. Hello? Yes. I mean, this company, no other company on the planet can make the revenues this one can, not even Apple. In one day, $115 billion in sale. One day. What? That is insane. The PE is low. The price of sales is low. It's just stuck in the political war. Now, technically, this blue-green thing is a harmonics trade that suggests a target of $210 in JAGS. Huge resistance around the 165, 178. Huge amount of resistance from volume. Huge level resistance from the Thursday debacle. I mean, that whatever that line is. But I'm hopeful. I'm holding longs for that scenario. Okay, so that is Baba. Somebody said Ford. Ford, I shared with the members. Actually, the starter group, I think, is the one that got Ford and GE, if I'm not mistaken, under $7. That was my get long Ford. And up here, no freaking way. Up here, no way. Because check this out. These are like 1998 levels in Ford. Anybody that bought here just bailed all of these guys out. If somebody's stuck up here, I'm not going to be the chump that bails them out. It is a good trading stock. So if you're actively trading, oh my gosh, if you're actively trading, you can trade it, but you better be good with charts on 15 minutes, 120. Otherwise, you're at a disadvantage, folks. You need to be in a room where we're tracking it like this to trade Ford. Lucid is in here. I promise you that we traded it well. Well, I didn't trade it. I shared pretty good information on it. Okay, good base. It better hold. Otherwise, if you lose this one here, you're going back to 16 or 17. It's too expensive right now. And here's a thought, okay? Lightning truck, pretty cool. The Mach-E, pretty cool. I live in Tesla land where electric cars everywhere. Now I'm seeing a lot of Audis. Now I'm seeing a lot of Mach-E's. I haven't seen the Lightning yet. I don't know if they're on the road yet. But here's the thing. So electric vehicles are losers as far as margins. They don't make money for the companies yet. The F-150 is their best seller and probably the most profitable. I don't know about that part. Do your own homework. Logically speaking, no Tesla buyer is going to stop buying a Tesla to go buy a Lightning. The person that's going to buy a Lightning is the person that was going to buy an F-150 anyway, or a Ford anyway. So they're cannibalizing their own Ford sales. GM buyers don't buy Fords, guaranteed in general. My son is a diehard GM kid. He builds GM trucks for a living, and he would never touch a Ford. So the fact is, they're going to cannibalize more profitable products that have been winning for them in order to make that transition. So yes, the sales might grow. The EV sales will definitely grow. There's no doubt. But what's going to happen to their bottom line? They're already not very profitable. Tesla has double the margins that GM or Ford have. So Ford generates, I'm going to guess, 17 billion in gross profit out of 130 billion in sales. Tesla generates 12 out of 48. That's a huge difference. The relationship, it's so much more efficient with Tesla. And I'm not a big Tesla fan. I'm just telling you facts. Okay. So Ford up here is a pretty big risk. Right now, it's better than up here because you have this cluster, but that's not bulletproof. You lose this, you come back down to here. Put an alert to re-engage lower. Or if you're going along here, take 20% of your total allotment. What was Lucid? Okay, Lucid. All right, so I did Lucid today, actually. Let me show you the lines. And there's one candle to look at. Can anybody guess what candle I'm looking at? What date? There's one candle that sticks out more than any other candle on this chart. It's not the biggest candle, so don't look at the biggest candle. Speaking of Ed, look left. November, no. Good guess though, but no. March, no. No. Come on, Nick, what a dork. No. Yes, what February, Ovi? Robert, what February? This one? If you said this one, correct. Yes. February 23rd. Check it out. You rarely see candles like this one. It's called a doji, and it's a monster doji. Look at the range, not the gap. Look at the range of that monster candle. So what happened here? They opened and closed at exactly the same spot. Meanwhile, they loved it to high heaven. They hated it to hell. And they said, you know what? We have no clue. Let's just close it exactly where we opened and hang on to that level for months. Let's see how long they hung on to that level. That happened on February 23rd. They went to here. They went to here and they said, nope, we're stuck here. And look, how long is that before they finally came back to it? So you better pay attention to that. And guess what? Guess where they are right now, right in the middle of it, I believe. Here, let me put down the lines. I put a box around it. Okay, that big box is February 23rd. Price is right in the middle of it right now. That's how, tell me you don't believe in charts. I mean, it's not a coincidence. They laid it out from February 23rd, where they want to be. They had too low, they had too high. You know what? Let's just go back to where we're indecisive. That orange line, I did not draw. That is mathematically the busiest volume spot by a mile. So it's sticky. This is a good support. You do not want to lose that. You lose this one, you're going down to 28-ish, maybe even 25. So you put an alert here and you wait. Nothing to do here, in my opinion. You either buy the dip and get long here and stop out immediately for a trade. This way you swing it back up to here, or chase it above here to see if you can get up to here for a trade. For an investment, personally, I would like to see more from its P&L before I say, okay, it's going to have this much kind of valuation. The cars are great. The company fans are awesome. The price is super high, so it's a niche market. It's the cheapest one is more expensive than the high-end Tesla. So it's not going to be very easy for them to capture a wide net unless they produce a low-cost model. Okay, so somebody's asking, what are these? That's just volume profile that shows the volume bars on the left side. Okay, so let's not get bogged down with that. That conversation goes on inside the chat room. So be careful how you're trading it. Actively inside the intraday, plenty of entries and exits. So this is a 2-hour chart. You can see base, sell. So ping pong between the two. Sell an iron condor, that could probably work, although I would not sell a call spread up there. That's a crazy stock. So not my jam. I would rather swing trade it. So I get long anywhere here and I'll stop out if this is lost. I fade it here, or I would chase it above here to get to here. That's the trade right now. Ping pong inside this range. That's Lucid. Who else do we have? NVIDIA, we'll do NVIDIA. We did AMD. We'll do X. And I think I would have covered everybody's requests. So NVIDIA and X coming up next. All right, Robert, I expect to see you in the chat room. I promise you it's all plain, simple English, cool people. All styles, futures traders, options, equity, blend of all. Okay, so NVIDIA, this was wrong. They gave it right back up, went back into base. So if I have not closed my longs, this is not a place where I panic out on Friday. If somebody sold their calls on Friday, they need help with their charts. If somebody bought puts on Friday, well, it depends on their intentions. If they have a lot of at stake, then it's never too late to buy insurance, although suboptimal. So from here to here, I expect a lot of buyers lurking. That's the statement. However, just like the other stock, if it bounces, look, the sellers are in charge. They're selling pops. If it bounces, that's another one of these. And if it does this, and look what happened here. It did this, the U-turn, and lost that. And what did happen? Boom. I'm saying, if it pops, listen to Nic's words. These are to-dos, Mondays, Tuesdays, fixed trades, book profits, or buy insurance, or any combination. Because if we pop, we could, we're not going to, maybe we could do what we did here. We go boop, and then come back to here. You lose this one, you're going to here. What? That's not my call. It's the machines. There's a lot of support. I told you, there's a lot of support, lurking buyers in here. That doesn't mean it's cement. Why? Check it out. That is just that's pre-pandemic. Way too high. X. Not an obvious entry, although you do have immediate support below you. So 1750 through 15, there are through 15 and a half, 16, you have buyers that will try to buy it. I'm worried about these two candles though. I'm going to tell you a story about X. Last year, I sold a $9 put, $9, and the stock went to like 480 or 450, whatever here. And they didn't assign me shares. I made a lot of money on the trade because some idiot on the other side of the trade. I don't know what they were thinking. Why on earth would you buy a put at 9 and the stock falls to less than half or just about half and you don't assign me shares? And I was like, every day I wake up, okay, today will give me shares. Nope. Please give me shares. Nope. Give me shares. Nope. 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 Ended up recovering and I made money on it. It's crazy. Can you still buy insurance on the stock you're down already? Yes. OV. It's not optimal, but depends on the situation. It's never too late to buy insurance. What is? Okay, AA. Is that Alcoa? Whoa. If you haven't booked your profits in Alcoa, please do so. This is not an obvious entry point at all. So if somebody says, hey, Nic, I want to sell puts in Alcoa, and I'll say, no, because if my mom comes to me, she's 90 on a fixed income, of course, actually no income, and lives in Lebanon where they have hyperinflation. So she says, hey, I want to invest in Alcoa. I say, no, mom, you cannot invest in Alcoa. Let's go to a monthly chart. Yeah, definitely not. So this is exciting on a monthly basis that this could be a breakout that could get you here. Maybe it does, maybe it doesn't. However, this here is definitely not an obvious entry point. It may be a big winner, but it is gambling from here. Personal preference. Rivian is I love the truck. I see them around my neighborhood, not a lot, but if you drive around Newport, you will see Rivian trucks, and they are striking. They command attention. You go, whoa, what was that? Oh, what the heck was that? So if I didn't know about Rivian, I would have chased it to find out. But one of my friends works at Rivian. Well, gym friend. So it's the problem with Rivian. I'm sorry, RIVN. There's no P&L to support it. I know they're going to sell out of every car they make. I know they have the backing of Amazon, I believe, but who's to say that it's here or 30 or 20 or 50? So it's a lot of subjective value. So how do I get long? If you force me to get long Rivian, I would sell a put in the 40s. So let's say I want to buy Rivian. I want to be engaged. I want to leave a lot of room for error. I go to Rivian. This is not a trade recommendation. I'm answering questions as to state of mind. If you force me to buy Rivian when markets are near all-time highs and it has no support from a P&L, I would have to bet out and collect $500 now to maybe buy it at 40. I can do that, okay, for September. So give somebody insurance for a whole year, and maybe do the same for at 35, not at 40. So that gives me time and distance, so it can get cut in half, and I can still be like almost even. So that would be cool, but I don't have any confidence in it now. I do like the truck and everything. A lot of subjective stuff. All right, I have 9 more minutes. CLF, I think I covered it today. It's one of my CLF. Yep, it's right there. So here, almost at my target. Let's see.
Yeah, let's pick some trades from the YouTube chat after this one.
Okay, I can't see YouTube. You're gonna have to tell me where they are. So
yeah, let me know.
All right, so I thought that it lost levels twice. See this? I said be aware of the U-turn a couple of times today. Well, back in October, I drew this and I said, be aware of the U-turn. They went higher than I expected, but they eventually came back and triggered the loss of the levels and came down. They're almost at my target. And I was generous. The target is lower. So I would not catch this falling knife yet as far as CLF, because let's go see in real life what goes to the left of that. Let's go to a weekly chart. So you can see a cluster of support, super strong support here, but it's wide. So maybe it's this tick, maybe it's that tick where it is right now. Maybe it's this tick. Level support, this is the best one. This is where Netflix came down to here in relation to that. So yeah, but look, that looked like a headline, head and shoulders neckline. So it could fall to here. So I'm not running to catch this falling knife of CLF. All right, so what's coming from YouTube? Let's hit YouTube.
All right, the YouTube folks there, UPST. I think you know this one.
Upstart, I know it by heart. So good. So yeah, let me see. I have the lines? Okay, July 23rd-ish, 4th-ish. It was like 125, 124. I said, this is a wild stock. It's stuck sideways for so long. That's not going to last. We went long somewhere in here. This happened. So, and then all the way here, are we going to long? Are we going long again? Are we going long again? No. We went long on record. You can go back and dig it up. The day before it spiked 17%. The next day it jumped 17%. I'm out. Thank you very much. And now it's back below that. So the point is, some people didn't listen, because now I just got a text yesterday, a message yesterday in the chat room saying, I'm stuck they sold puts at 280, that right here. That is definitely nothing I would have said it would be okay to do. I don't know where they sold it, but they're down, upside down in it. Now I have to do a video to say how I would get out of such a jam, because clearly, first of all, they did it at the wrong time. Remember the 3 stickies? The 3 stickies, evaluate the risk, that's fine. Take half, they didn't. And then have a reason. I don't know if they did. They didn't look left on the chart, that's for sure. And they didn't set an exit. That's the missing piece. So they did wrong timing from here, and they didn't set an exit. So now they're stuck. What do you do now? Well, they basically own shares from 280, but they don't yet because they haven't exercised on them, but they're upside down tremendously. So now they have to do the dance of rolling and rolling and rolling, which means just book the loss and open it out in time several times in order to lower the entry cost without any out-of-pocket expense extra. Meanwhile, they're booking losses and reopening the same trade, buying time. Thank you, Robert. I'll see you in there. Mosey on to the chat room if you haven't done that. So please, Rodrigo, he sounds like he should be there. So I think you'll have a ton of fun. Okay, so now we have support from this little jaunt in UPST. Now you have a big gap down here. Fundamentally, the company is solid. The P&L is up and away, but it doesn't matter because it's stuck in the IWM, small caps, small craps. Kathy would, people hate, sell meme. So it doesn't matter how good the company is. PayPal is stuck in there. Square is stuck in there. They're just stuck in this wave of selling small crap, and it's not crap. So if I'm not long, I can nibble long, half position at most. Preferably if I'm buying shares, I would rather sell puts, just like I showed with Rivian, way out in time, way below current price. So here's the ticket. Okay, check it out. Check it out. If I wanted to own 200 shares of Upstart, if you told me you got to buy 200 shares right now, I would go out and sell one put that commits me to 100 shares, and I would buy one call. I wouldn't buy a call now, but I would buy one call to commit for the other 100 shares, not commit, have the possibility. So this will mean I would put the least amount of money out of pocket. And I'm essentially long the equivalent of 200 shares. Least amount of money out of pocket. I don't have 200 shares times $100 out of pocket. Wow, it's under 100. It's amazing. Wow. Okay. So it's not a bad place to start nibbling or look at, but it needs the market to stabilize. Let's say Wednesday, the markets fall out of bed because Powell says something outrageous, which he shouldn't, but let's say he does. It could be 70. It could close the gap. I don't know. So all alone, it shouldn't. It has support, but it could be. I mean, look at that. This is just insanity. I bet you didn't ask the rally during the rally. It's like, why is it going? Why is it going? But now everybody's like, why is it falling? Well, because it rallied like insanity. Anyway, so a lot of question mark. If I'm long, I don't add. If I need protection, I would buy some protection. Okay. Whew. Oh, and part of going long Upstart, I would sell a put for 100 shares. I would buy a call for 100 shares, and I would immediately sell calls against it. Immediately. But that's a different conversation. Rodrigo, help with the chat room, please. Okay, one more from YouTube, and if it takes up 3 minutes, so be it. I've got to cut off at noon my time. I have somewhere to be.
Did you do Roblox already?
Roblox? I don't think so. We'll do it pretty quickly. It was on the list today, I believe. Go to the R's. Yep. Free fall. Does that say it? It's in free fall. Whee! It's stuck in that meme of selling small caps, etc. The company, I believe, has decent fundamentals. It's too young for Wall Street to trust it entirely. It doesn't have a lot of history, even though it's okay. It's just 26 times sales. That's pretty expensive for now. It's not crazy expensive, but it's not cheap. They're showing increase in sales. That's outstanding, but I think it's too young for Wall Street to trust it. A lot of support. If I haven't exited yet, this is not the place I exit. There should be buyers lurking here. Now, if the stock markets crash another 10% and you lose this one, you're going for a ride. I wouldn't add. If I wanted to get long, I would sell puts to own shares or buy a few shares, which are not time dependent. Then if it crashes and it needs time to recover, so be it. Or buy some calls and stop out after a loss of X%. That's my least favorite option of the three. One more.
All right. Let's go. Let's see what the folks are chatting about here. I already did that. Unity.
Okay, U, the letter U.
Yeah.
This one.
Yep.
Okay. Again, this one I believe is a good thesis company. Same story, good P&L, too young for them to have gumption with it. Technically, it broke a lot of necklines with hideous downside potential, but it's coming into a lot of support. How do I know that? That orange line shows that this is where most of the volume happened, here and here. That's the problem. Now it's stuck between two walls. Good support, a lot of resistance. So I would rather sell puts and put spreads and create income out of that than to hope for a rally. So if I'm long already, I am most definitely not adding. If I do add, it'll be by selling risk down here and letting time do the work for me, meaning I don't need a rally to win. And that's about it. That is solid support. Look, boom, support, boom, support. So it should have support, but it did break a lot of necklines. Technically speaking, this neckline should have that much downside, and it just doesn't make sense. But if the stock market's correct, this one could be below 80, but that's not my forecast. But if the stock market's correct, these don't trade in the vacuum. I'm scaring people because I know I said this first thing and nobody's listened. On pops on Monday, I guarantee you most people here are going to say, ooh, this is it. Let's go. Buy calls back. Don't buy calls. Fix trades, book some profits. If you need protection through Wednesday, you should buy some protection. How do you do protection? You can throw a blanket statement on the whole S&P, for example, by buying a debit put spread a month out on the S&P, just below current price. It will probably cost you $3 to be $10 wide. It brings $700 per $300 spent, just in case we poop the bed. Robert, it is, if you're serious about learning, I don't think you're going to get cheaper learning than being all year chatting with all of us, including me, all year at your pace. You do not have to be in the chat room all day. You pop in, hey, what I missed? Or, hey, Nick, I'm doing this straight. I'm stuck in this one. I'm thinking about this one. What's on your watch list? There's like hundreds of stickers on the watch list now. Thank you, Ed. I appreciate it. Okay, the education, I don't I have videos that are for you to review. They're evergreen videos from the basic. They're one module at a time. And every trade setup that I share via post is a 15-minute video that goes from start to finish. So if you like to see the lesson over and over again, it's going to be on video 15 minutes at a time. And if you're in the chat room, the education is you come and say, I didn't understand. What does that mean? Or I'm stuck in the trade. How can I get out? And that in itself would be an education.
Yes, guys. And for the questions about the subscription, just hold off on them. Once Nick heads out, I'm going to stay here, answer some of those questions, guys. So I don't know if you're done, Nick.
I am done. Physically, I'm out of energy and I'm out of bang. So
what are some closing remarks here for the folks on why they should?
The closing remarks, I want you to be,
and the chat room, both.
I want you to be careful tomorrow and Tuesday. Don't follow your instinct. We humans have instinct to chase the herd because that's how we stay alive in the wild. You see people running out of a forest, you chase them. You don't run into the forest to find out what's scaring the hell out of them. So that instinct is the exact opposite on Wall Street. You got to turn that off. You see people running out of the forest, you run back in to see if somebody left their wallet to pick it up. So this is the tomorrow and Tuesday. Control your emotions. Don't chase. Fix. Book. Insure. Okay? Just control. Even if you miss out, that's the right thing to do. Even if you miss out. Because Wednesday is a coin flip and you have all the earnings. The mega cap earnings are coming too. And I bet you out of Wednesday, there's a good chance we're going to have a relief rally that Powell is off our freaking screen and off with it. If you don't know anything about charts, Ovi, you come in and say, hey, what does this chart look like? I'll give it to you on a piece of paper. That's why you need to be in there. Robert, I hope I see you in there. I know it doesn't look cheap, but I promise you the amount of data that gets packed into you is nowhere near the worth of the value I put into it as far as efforts. All right, I gotta go. I love you all. Thank you for the time.
All right, sounds good, Nick. I appreciate you, man. I'm gonna share here the newsletter so that you guys can see some of the trades. Okay, so I think you guys can see that. Let's go to the most recent one. So these are the newsletters. So I'm gonna just open this really quick. Let me pull up the chat. Questions about the subscription from Nick, post them in the chat. And we're gonna go over them really quick. You're welcome, guys. Good session. Absolutely. Throw your questions in the chat as far as like the questions on the newsletter, guys. With Nick, the newsletters, the starter, the enhanced, or the ultimate. If you do have any questions, if not, that's fine. I can go ahead and just head out here. I'll leave the stream running, guys. Just want to make sure that if you have questions, go ahead and ask them. Right now is the time to do it. And I'll drop the link here one more time for you folks. This is for the newsletter. The option starter is $7 a month, just till midnight. That's one trade every 2 weeks. And every 2 weeks, you're going to get a trade from Nick sent to your email. You can sign up for text alerts if you want. This is how it's going to show up. So as an example, he's talking about Twitter and Nike here.
And then this was the pandemic breakout reports earnings.
I mean, there you go. It's like 12 minutes, something like that. He's talking about the specifics, the entries, the exits, all that stuff. So that is what you get when you get a trade idea from Nick. And basically, it's a full video explanation. You have the text format as well, and any other specific, items there that he would want to cover with you guys. Let me just read over the questions here. One sec. Okay, I got the questions down here. So, all right, let's go with the Zoom one. I joined the starter option. Will Nick's picks get emailed to me? Yes, and you can sign up for text message alerts too, for free. For you, it's free, not for us. Bala. Stocks to watch. Okay, so the stocks to watch is not from Nic Chahine. That's just a separate add-on. You only pay it one time. It's for the rest of the year. You do not have to get that in order to go to the enhanced. Once you go through the checkout of the first one, the $7 a month, the starter, which is one trade every 2 weeks, it'll auto refresh the checkout and it'll take you to the other checkout, which is the enhanced. That one is $14 a month. That's one trade every week. So literally you're paying like single-digit dollars per trade. And then once you finish that checkout, you're going to go to the it's going to auto refresh to the ultimate, to the options ultimate. That one is 3 to 5 trades per week. And on top of that, you do get a lot of bonus work and all that stuff. So Dario on the YouTube chat is asking the same thing. What does the $7 a month get? It gets you one trade every 2 weeks from Nick. It's the most basic. It's the beginner basic. That's why it's called the starter, package. So that is basically what you would get if you're starting, to little by little. But if you're more advanced, then, you definitely got to scale up to the ultimate. I'd probably say even further than that. Alex, send me an email. I'm going to put my contact there if you have a specific question about something that is not Nick's newsletters. All right. All right, Buzu asking, if I subscribe, do I get a sticker? Do I get a sticker to trade? I'm not sure what you mean by a sticker. Oh, a ticker. If you do, of course. I mean, yes, the trade idea has to come with a ticker. Now, Nic Chahine does spread, so it's obviously a little bit different. It's not like how you would trade a stock. So, but all of the details and instructions are given to you in the actual lesson, and you can see that there if we were to zoom in and go through it. But yeah, basically that's how I open this trade idea. Let's say if it goes to my email, I just go open my email, click on it, it takes me to this portal, and that's it. That's all you do. Let's see what other questions. If you get the newsletters, nobody with the newsletters gets laptop. It's only for the chat room, which is separate. It's not the chat room is not $7. Just I want to clear any doubts that you guys might have. We want to be able to do it at that price, unfortunately. So it's a separate checkout, but if you have questions on that, all you got to do is email me. Bala, no, it does not. No, newsletters are separate. The starter is one subscription. The enhanced is a separate one. The ultimate is a separate one. They're not one in together. They're all separate, pretty much. All right, David. Yeah, send me an email, dude. You're welcome, Alex. Pedro, I'm not sure. Maybe try refreshing it. I think maybe you could have already gone through. I'm not sure. If you have questions, just contact. If you have like customer success and account maintenance, email newsletters at benzinga.com. All right. So, all right, let's see anybody on the YouTube chat. Any more questions before we wrap this up, guys? The fun Sunday, huh? Ench, what about the chat room? Well, you guys are asking a lot about this chat room. For all chat room questions, guys, send me an email, please. Okay. I'm going to put that information there. All right. But as far as the newsletters, right, which is trade ideas sent to you by email from Nick, we're doing the special where it's like $7 a month just for midnight for the starter, which is, it's literally like lunch or half a lunch in California. Right. So you can do that. And obviously, if you do want to take it a little step further, which I really think you should do, because the more experience you get, the better you're going to be. Practice makes improvement, not perfection, but it makes improvement. So that way you can go from the starter, the enhanced, and to the ultimate. And I would suggest to do it on the monthly basis because it would help you out, dipping your toes in it, since we only offer this yearly, guys. So we are giving you guys a good deal for that, pretty much, for monthly. We've never done it monthly ever. Okay, let's go through some more questions. I'm trying to start through PayPal. Bala, what do you mean for the chat room? Is that what you're saying? Just send me an email. I think we'd be better offline with that. Willie, prepay for what? For the newsletter? You could do that if you want, but that's not the checkout. The links that we are putting in the chat are only for monthly. So with the exception of, yeah, correct. So everything's monthly here, folks. All right. If anybody does want the chat room or anything like that, it's separate, and that's yearly, not monthly. So these are the trade ideas, guys. As you can see, I'm going to give you a sneak peek of the chat room really quick. I don't want to make this take too much time. But you can see you have charts there. You have scanners there built in. We built those. Shout out Vin, shout out Sandeep. You have the chat room there with all the videos, all that stuff, pre-market updates, everything that Nick puts there, daily trading, live trading. I mean, I could go on for days, guys, but I don't want to sound like a broken record. So yeah, that's live trading chat room with Nick. The trade ideas, I do love them as well because they are just so easy and simple. I mean, honestly, if you're starting for $7, like if $7 is too much to risk for you to get started with options, then you shouldn't even be trading at all, man. Like straight up, honestly. We're giving you guys the opportunity to jump in on this special deal that we're probably never going to do again, which is a starter for $7 a month. And jump in. It's the best pretty much way for you to jump in when you're actually getting a sweet deal. And keep in mind, you have access to all the prior trades, so you can learn from that as well and use it for education, like real life education, not books. We're talking about like practical education, not the kind of education that you're just reading a book. So, all right, let's go with the questions on the. I mean, you guys are lit with questions today, man. Let's go to the YouTube one. Dario, I'm a basic. No one else can see that comment, but that's funny. All right. Ench, what about the chat room? Yeah, so the chat room is separate, guys. All right. Keep that in mind. If you do want to have a question about the chat room, just email me. You have to email me, okay? We'll take that offline. Red rum. How much is the full amount of picks with the? All right, so well, that's a lot of picks. So the starter is 1 to 2. Okay, starter is 2 a month. Enhanced is 4 a month. Ultimate is like maybe 12, 15 a month. Um, so you're gonna be getting it plus, I mean, and that's just the newsletters, right? Keep that in mind. You're getting all that for like, I think like what, $120 a month if you get like the starter, enhanced, and the ultimate. So and the chat room is, you get like several, like, I don't know, man, 2 to 4 trades a day. It's ongoing, in and out. It's live. So it's you could get 4 one day, you could get one day. But we're focused here on the newsletters. Any questions on the chat room, guys, just email me, okay? Is Dario, is the link for text in email? I don't understand that, but I think I know what you're trying to say. But I'm not sure. So if you can help me out there, Dario, is the link for text and email, the link for the text. You get text alerts for the trade ideas on the newsletters. You also get them by email. So default is email, and you can sign up for the text message alerts if you do want that. All right. I think that covers your question, Mr. Gordon there. D Rob questions the monthly option ideas. Are they single leg, and are they simple enough for all levels to follow? Monthly option idea are single leg. So yes, they're single leg, correct. You'll get basic calls and puts, and you'll get spreads. That's really what we're doing. Now, if you want to get more advanced than that, I get it. I mean, you're gonna have to go to the chat room for that, honestly, because the newsletter trades are just calls and spreads. If you're looking for more like condors and butterflies and all these other things they have, you really have to get into the chat room, unfortunately, because that's the only place where the advanced folks are, right? They don't mind paying a little extra to have a trading partner, a trading mentor, a trading room with all those resources and folks and all that. Red rum. So it's like, but that's for the newsletters. We're talking about let me just pull out this calculator, man. So you have, that's for the newsletter. So the starter is 2 trades a month. The enhanced is 4 trades a month. And the ultimate is like, let's say 15 a month. So that's about 21 trades a month. Okay. Now, 21 trades a month. How much would that cost you? $7 a month for the starter, $14 a month for the enhanced, and $47 a month for the ultimate. That's $68 a month. So for $68 a month, you're getting like 20 something trades. Like that's if you go through the starter, enhanced, and ultimate newsletter. Okay. So I'm going to post that link there so that there's no confusion. We know what we're talking about, folks. Tyrone, I think you're good where you're at, if that's the case. I'm just going by your question. I think you're better off where you're at. This is a little bit more like live trading. Okay, so the link that I just posted in the chat is the one for the $7. Okay, yeah, I'll post my email, Howard. One sec. The email that the link that I posted is the newsletters, right? The trade ideas sent to you by email starts at $7 for the starter, 14 for the enhanced, and 47 for the ultimate. So like I said, $68 and you get in like 21 picks. So getting a lot there. And I'm going to post my contact if you have questions about the chat room, specifically about the chat room, not about the $7 subscription. Right there. So I just put it there for you guys. All right, let's go through these questions. No, Bala, unfortunately, you have to go through the tiers. That's the only way, because we don't offer it with, I mean, this is going to expire in like midnight. So either you get it or you miss out. That's it. Mila. Okay, Mila, I'm going to put the link there for that for you. 1 second. Okay, I just put the link there for the chat for those that do want to take a sneak peek into that. That will expire at midnight as well. And now let's get back to the questions here. All right, Mila, the link is posted. Timmy, what does a text alert look like? A text alert is what it sounds like, a text alert. It just alerts you that there is a trade, and then you can click on it and takes you right away so that you can check it out, look at the video, do all your stuff, take down your notes. Okay, Tyrone. What's up, Tyrone? Trying to decide between, okay, all right. Based on your situation, Tyrone, again, based on what I'm reading from what you say, from what you're saying, I would say you're good where you're at. All right, Nancy. All right, Nancy, does your website explain the difference in training, chat, chart? Not sure what you mean, the differences in what specific difference of where, like in the website itself, or just a little confused. Help me out there. This is newsletters and the newsletters for Nic Chahine. So these are trade ideas sent to you by email. You don't have to go to a different website, nothing like that. It's our portal. So it's, you know, proprietary. Benzinga, you'll see everything there. Bala, you got the $7 one. It didn't let you get to the enhanced. Try going back to the checkout. Try refreshing it. See what happens. Example for newsletters. Linda, can you see my screen? I don't know if you guys can see my screen or what you're looking at. Shout out Dario. You signed up? Nice. Welcome. Welcome to the family, man. You know how we do it here, right? If you don't know. Now you know, bro. Shout out to Dario, the most recent member here of the options family. Bala, let me know what happens if the refresh doesn't work. David Rios, $3 tacos Monday to Friday. Let me know where. I'll definitely be there. Example. So Linda, you see, you see Linda, this is the example. So like, this is the video. I'm gonna hit play.
So they just lost this line, and this line,
So I mean,
here are the caveats.
yeah, so I mean, Nick does that whole video, like 12, 15-minute thing, and he explains the trade. He goes over the macro, the micro, the fundamentals, the technicals, the price channels, the levels, everything that you might want to, the options chain, like literally holding your hand, like placing the trade and giving you the reason why he's making that trade. So all right, let's go through some other questions here, folks. Same question. Where do you find the next sign up for text? That's in the premium idea site, guys. You have to, all right. So I'm going to share my screen now. I'm sharing my screen. If you see my mouse is on the top right, I'm only going to do this one time for you guys. All right. Pay attention. You go to the top right, click on account. You click on support. Okay. So a lot of you guys want these text alerts. Once you click on support, let's give it a sec to load up, and then you're going to have the option there in your face right there where you can put in your phone number. Okay, 1, 2, 3, 4. That's your phone number, your email, accept the terms that, you know, that you want to get the text alerts, and you just click submit. Now, if any of you guys unsubscribe for any reason, for whatever reason, and you're not getting your email alerts, we put in a link there that you can just click here to re-opt in, because you have to do it manually. Like by law, we can't opt you back in when you opt out. So then you put your email here at Gmail. And I know this is tricky, but you're not supposed to click submit. You're supposed to click a blue link. It would come up down there, and it only comes up if you're actually unsubscribed. Okay, so enough with that, guys. So now you know how to get the text message alerts. This is the trade idea itself, Linda. I don't know if you can see it there. So this is the video. It'll come with a full detailed explanation of what's going on in the markets, the levels that he's looking at, and a lot of different things, because every trade's different. You know, the background in the market is always changing. So there's always different things he's looking at, but he'll give you different ways that you can trade it. You can buy a call, you can do a credit put spread, or, you know, something different. So he will always give you that information and how to do it. Dario, welcome to the family again, man. So Red Rum asking, he's gonna send an alert like buy a debit call spread for Apple. Yes, yeah, that's what it's gonna send. Um, I mean, he will like, for example, here he included a buy 150 call, sell 160 call, and then he gave another type of example there. So yeah, of course, he gives you everything that you need to make the options trade. All right. Um, Bala, if you're having issues with the checkout, just send me an email. Okay, and we'll work that out. I'll get someone in tech support to help you tomorrow when we're open and everything. Gordon, I'll be back when I trade up for the chat. Dario, you got to hit me up. All right, I'll hook it up. No worries. D Rob, is the $7 a month good for just 1 month or until canceled? So it's $7 a month, right? And if you do want to cancel, you just cancel. So it's always going to be the same price. It's never going to change, regardless, right? You know, like everybody's dealing with inflation, but our prices are getting lower. So I mean, you guys, you know, you're lucky. That's all I'm going to say. You guys are lucky. Prices going up everywhere except here, right? So there you go. $7 a month. Yes, until you want to cancel it. Dario, what's up, dude? Anon just signed up. What's up, Anon? I got to give you the formal welcome here. All right. Shout out. $7 a month until you want to cancel it. Yes. Now, once you cancel it, you're not going to be able to get this deal again, unfortunately, because this will expire at midnight. And we're not doing this again. We're not doing these monthly things again. I think probably by the end of the month, it's gone. But I would take it while it's there, guys. That's all I'm saying. SA, how do I receive the text alerts? I just went over how to sign up for the text alerts. You can rewind the video, SA. You're welcome, Gordon. Tyrone. You're welcome, dudes. Don't worry. Put any other questions you have here. I know you guys are on fire, but let me know any other questions you have so we can wrap this up, folks. Yes, Bala, send me an email. Where do I get subscription for the chat room for Nick? All right, I'm going to post this one more time, Zuzan. All right. 1 second. And if you have questions, just send me an email. Susan, it's right above. It's right above. It's already posted there. I don't know if you can see that, Miss Susan. So $7 a month is very attractive. I signed up last week. When I make some bread, I'll upgrade. Absolutely, Ketchy. We'll break bread together here, man. Let me know. Good stuff, though. I mean, if $7 a month is, I don't even know what costs $7 a month anymore. Like, I don't even think Netflix costs $7 a month anymore. There's not one single subscription I think that costs $7 a month. If anybody knows, let me know. I think maybe Disney, not even. So yeah, it's pretty attractive, Ikichi. It's, you got to be. I mean, this is chunk change for most of you guys. So if you can do that and then you can see the results, 90% win rate, that's pretty good. It's pretty good. Also, if you're learning, I mean, it's really the best education you can get at this price. It's like getting financial aid pretty much right now with these prices. All right, Jeff Costin, the email, yes. Yes, that's right, Jeff. So the link will take you guys there. So if there are, Gregory. Okay, Gregory, your question is the $7 for the newsletter and the option trade subscription? The $7 is for the option starter. The starter is one trade every 2 weeks. Once you complete that checkout, once you like pay and everything, it's going to auto refresh, and then it's going to like automatically just refresh into the next tier. And that one's like $14 a month. And then once you complete that, it takes you to the other one, the ultimate, which is 3 to 5 trades per week. And that one is, I think, $47 a month. You have to go through the checkouts, Boris. You have to go through the tiers. So this is the only way that this is going to be available, guys, pretty much. Definitely going to stop. From what I understand, these monthly things are not going to be around for too long. So you might as well jump in while they're there and take your time and decide. There's a 14-day money back guarantee on the newsletters. If $7 is already not good enough for you, you have a 14-day money back guarantee on the newsletters and 7 days on the chat room, guys. So I think I covered everything. If I didn't cover anything, let me know in the chat if there's any specific question that you have before we do wrap this up on a beautiful Sunday. Let me know, and we'll just leave the stream here running, folks. But you can reach out if you have questions. I'm just posting links there. All right, guys. Thanks for being here with us today on this beautiful Sunday, January 23rd. It's been great, guys. An amazing session. I know that I learned a lot here. I always do. A lot of you guys, like I told you from the beginning, you're going to have a much better understanding of options, of how the fundamentals work, the options chain, delta, all these other things that Nic is very, does this every day. You're going to start to get the grip of how he handles things when as an options trader. So, um, I had a great time here, guys. I know that you guys did. The feedback's pretty well. The comments are nice. We appreciate you guys. Also, we love you guys as a family, the Benzinga family. All of you guys that joined, you already have access immediately. So you can go ahead and start looking at the prior picks from Nic, not just like the most recent picks, but the prior picks as well. So you have direct access, guys. Any questions, there's the contact in the chat. The links to join are there in the chat as well. And again, thanks for being here with you guys. And we'll see you on the next time. Have a great weekend.